This is Michael Good from reapertrades.com, here with your daily trade recap for November 12th, 2009. I had a bunch of trades. I'm going to cover most of them after I cover one that looks different than the others. Can you tell which one that is? Hold on just a second. Here are my trades for the day. Now, which trades do not fit? Oh yeah, the $400,000 worth of Berkshire Hathaway I traded. Okay, what's up with that then? Let's see. What's up with that is I shorted bought two Berk A shares and shorted 60 Berk B shares. They're 30 for 1, the economic equivalents. So 30 Berk B shares have the economic interest in Berkshire Hathaway that one Berk A share has. Their voting rights are different, such that the Berkshire B shares have, I think, 1/100th the voting rights of the Berkshire A shares. Anyway, these shares are convertible. A shares can be converted into B shares. B shares cannot be converted into A shares, though. So what that means is the B shares can never be worth more than slightly over 1/30th of what the A shares are worth. However, they can be worth a lot less if there's a whole bunch less B buyers than B sellers. You typically find that the spread between the two, you multiply the B shares price times 30 to get a comparable price to the A shares. The spread between the two is between $500 and $1,000 in normal times. Currently, there is no spread. So I shorted these, or I made these trades at an average spread of negative $80. So what that means is that if B shares go up relative to the A shares will be converted into B shares to arbitrage that. So my risk is very, very low. It's basically the bid-ask spread. However, if the B shares drop relative to the A shares, as they do from time to time, and over the last year they've dropped to over a $4,000, $5,000 spread once or twice, and a spread of $1,500 to $2,000 has been quite common. If that happens, then I just close the position and make a nice little profit. So I have downside for the full position here of maybe $300, $400 at worst. I have upside potential of about $2,000 if the spread goes to 1,000, which is quite normal, or if it goes up to 2,000, that's a potential profit of $4,000. So I like that risk reward. Also, when you're playing this big in a longer term trade, you need to take into account your borrow rate on the shares you're short. The borrow rate on Berk B right now is 0.25%, and that's an APR. What that means is that 0.25% I need to pay per year as the value of the Berkshire B shares. That means my interest cost on the borrow is $500 for this full position if I hold it for a year. So again, that's not very much. So why the heck would I do this? It's a low risk, but somewhat higher reward trade. The risk to reward ratio is great. The potential reward isn't a lot, but it's a great way to get bond-like returns with very little risk. And if I need the cash for something else, I can always sell at a very small loss. And I mean, it's just a great trade. So far this year, from doing similar types of trades, I call this pseudo arbitrage, I've made just over 8,000 bucks. And you say, wow, that's not very much, and I've used a whole bunch of capital to do it. But when the risk is so low, it's a no-brainer if you have excess cash. So anyway, other trades, don't have much time. VRMLQ here. This was a Tim alert. I bought here right after he bought, sold half here, 200 shares, sold my other 200 shares here, rebought right here and here, 400 shares for potential gap morning spike tomorrow. Other trades here, mostly small. KNDI was a breakout. Conalog went green. It's a former runner. I tried it. It didn't really go anywhere. And then Playboy has merger talk. I short sold it just a little bit off of its spike. And that was a somewhat risky, but not too horrible trade. So overall for the day, 684.23. And that's it. Thanks very much, and check me out next time, reapertrades.com.